Hey guys, I'll give a few minutes. I know I was running a little late, so we'll give a couple minutes for people to pop in. Test.
I can hear you. Hello, how you doing?
I hear
Good.
you.
How are you?
Got you. Doing good, doing good. I'm sitting here about to head out from the cemetery, and I was like, wait, what is 8 Eastern? And she's like 7. I said, oh shit, I was talking to that. I better be on for homework.
It's okay if you can't, man. I understand you got shit to do.
Nah, you're good, you're good.
Family stuff
I'm here
comes.
watching from the phone, so just hanging out.
Family stuff first, man. I always say that.
Oh yeah, for sure, definitely. But you could do more family stuff, when you get pick the right options.
Yeah, that's true. That's why we do it, right? So we can.
Yeah, that's exactly why we do it. For sure.
How you been making out this week?
Oh, this week I haven't traded. So on Monday I was stuck with the money not clearing from TD Ameritrade.
Yep.
So just sitting there, not available. So I was like, all right, whatever. Didn't get in nothing Monday. And today I took my daughter to school, so I didn't get home until like 10 o'clock Central Time. And just by then, stuff was just starting to be real choppy. So I just sat back and watched. But no, I was looking at those 140Ps for Apple yesterday, right after the bot put them out. I was having a conversation with, I think, T Money and Tommy were in there, and he was like, I don't know. I was like, man, I don't know. This buy. And then throughout the day, he was like, well, if it drops throughout the day, I think it'd be a good idea to buy. And of course, the money still hadn't cleared, nothing. So by the time I saw them today, I think they went up to like 68 cents, I believe, something like that. And I was like, damn, from 30 cents yesterday, nah, I'm just gonna sit back and wait. And then they dropped, and then I was like, I just missed my entry. So I was like, you know what? I just took the day off. So I'm sitting on some cash, just
no
ready.
trade is a trade,
Yeah, no trade is a trade for sure. I mean, I don't want to force anything, and then just get ate up with the sideways trading today because just eating a lot of premiums up. But I'm definitely with the hand on the trigger, ready. So, and then tomorrow's 0 day, so I was like, should be better to have more cash available for tomorrow anyway. So
for sure. People finally rolling in here. We'll give a couple more minutes for more people to roll in. Oh, look at J House with the fancy picture.
Oh, yeah.
All right, I'll give it a couple more minutes for people to roll in as you guys are coming in. You guys should probably at least be able to see my opening slide for Pareto's principle.
Yeah.
All right. And this is just a quick mindset type thing, and to keep things clear as we're going. Check my other stuff, make sure everything else looks good. I'll start here in 2 minutes. I'll start right at 8:10. Get rocking. Always appreciate you guys coming out and spending time here. I know we're busy. We all got family and shit. Always appreciate
all the work that you put in to make this happen, plus all the extra charts and levels that you have to get ready, all the extra stuff that you do too. So appreciate you too.
Thanks, man. I didn't even look at stuff I was having a rough day today. Coming off nights. Last night was my last night shift, so a lot of times I kind of I'm super foggy and shit, and I really didn't pay attention to a lot except for the stuff that I put in the chat. So I'm gonna have to catch up tonight and see where things ended up. But all right, I'm just loading my Thinkorswim right now. It's just so I can run my scans while we're going through stuff. So let me hit record just so we have it. Record in the cloud. I know this is also on YouTube and everything, but we'll record this. Essentially, what we're going to do is going to go through a quick education minute, like I've tried to do in the past, and then I'm actually going to go into some quick technical analysis, support resistance, kind of looking at it on the larger time frames and the lower time frames, and then a quick fib setup as well. I've been asked by a couple people just to kind of go over it quickly, and then I'll be able to give you guys a kind of the basics, and then you guys can shoot me questions in the chat or DM or whatever, and we can kind of hone it in and fine tune those support resistance stuff and fibs. So we'll save the questions till after we get through the education minute at least, and maybe even we'll take questions during the technical analysis. So we're going to start with Pareto's principle. And essentially what Pareto's principle states is that it's called the 80-20 rule, whereas 80% of all outcomes come from 20% of your inputs. It was first discovered by Vilfredo Pareto in 1896 when he discovered that 80% of the land in Italy was owned by 20% of the population. This phenomenon is known as the power law of distribution and is found across many distributive situations, i.e., 80% of sales comes from 20% of clients, or 80% of countries' wealth sits with 20% of the population. So how are we going to use that within our trading? If 80% of our successes come from 20% of our work, we need to analyze where those successes are and how we can focus on them to strengthen our own particular style. If 80% of our positive P&L comes from trading zero-day SPY, focus on that. If 80% of our wins comes from the 20% of the time we swing trade versus scalp, focus on swing trading. If 80% of our wins come from a certain pattern, triple tap, Darvis box, breakout, VWAP break, focus on that particular pattern. Why should we be wasting our time on the 80% of things that don't work for us? Why should we be swinging when we are scalpers? Why are we scalping when swinging works best for us? Usually one answer, boredom. And actually there's a second one, FOMO, right? We hop in the fear of missing out, and that's what breaks us from the stuff that works for us. So how do we work this in? We need to analyze our trading history. To hone in our 20% of our successes, first, like I said before, journal. You cannot track or understand where your strengths are if you do not journal or track your trades. We need to look at what patterns or type of entries lead to our biggest successes. What tickers do we tend to win the most on? If we're always losing on a particular ticker, why are we playing that ticker? Even down to what days are we most successful? With the 80-20 rule, you may have one day that you tend to get all your gains from. If that's the case, why are you trading any other day? Focus on that day and just crush it. Benefits of the focus. Now what benefits can come from this? Well, first off, repetition is the key to all great traders. Once you have established what your strength is, this is now your edge. When you become clearer and clearer, a key to successful trading is to become as automated as possible. If you only have to look at a couple of things a day or trade, then your ability to automate is greatly increased. Bringing it all together. When we find that the 80% of our successes come from 20% of our work, why would we ever waste time on the 80% of noise work that we do on the regular? Focus trading is successful trading. Most of us will admit that some of our biggest losses have come from jumping into plays we didn't see or understand, or in on a ticker that we didn't know much about. Can we still win on these? Of course we can. But why should we waste energy or on something that might not work when we know what usually works for us with a decent probability? A lot of us trade out of boredom at times, but if we can focus on our few tickers or styles or setups that work for us, then we can get to the holy grail of automation in trading. Focus on our strength and let the weakness wash away. So I hope this is kind of clear on the 80-20 rule. Simply put, if you break down all your trades, most likely 80% of your wins are coming from 20% of either a ticker or a certain style. This came about because STB said, I don't know why I trade other tickers when I can easily just do this on SPY. Well, that's exactly what this is. Most of us could easily just make 80% of our wins by focusing on that 20%. And that's really what the goal of trading is, to focus it, boil it down to just simple things that we look at. I mean, JCat, he plays his triple taps, right? And the reason why he does that is because he knows that most of his success come from there. And if he plays something that's not a triple tap, tends to not always work out for him. So that is one of the goals for us moving forward. Does anybody have any questions on that? I know I blasted through it really fast, but I don't think it needs a whole lot. If you need to go into it deeper, we can go into it deeper as well. No questions? All right, let's move on to some quick technical analysis then. So this should, well, trading view. I might have to change the screen that I'm looking at. Give me a second to figure out the share screens. Can y'all see the trading view, or are you still seeing the PowerPoint?
I can see trading view right now.
You do see trading view? Okay.
Yes.
All right. So let's get into how we figure out support and resistance. Let me think of something that I probably haven't messed with on trading view before. What's that? DATs, right? DATs people are talking about. So essentially, some quick technical analysis, support and resistance. Support and resistance is just ceilings and floors. So when you look at a chart like this, which obviously it started back in August, so even the daily chart's kind of small, we want to look at areas where the price has reacted. So one thing that I always start at is here, I start at the last day, and I start looking to see where it closed and if in that area there was price reaction. And technically, there wasn't really anything reacting to the left here. So I want to put a line there. And I just moved back to each bar and the tops and the bottoms of each bar and wick and kind of look for the same areas. So no reaction. And this is why I keep the crosshairs up as one of my for tracking through the stuff. So really, I go down to the bottom of the structure and I see there and I look to the left and it looks like we have some reactions there. So what I'll do is I'll put a line and I'll show you. So what happened was the price came down, bounced off here, so it created a support. Now, if we look back here, when it first started running up, it came up, bounced at that same exact area as resistance. So now we already have two touches. When it finally broke through and came across, it used this as a nice support. We have a bunch of touches now. With most lines that you put on your chart, you want to have a minimum of 3 touches. So here we have plenty of touches. It's a clear support. We dip below. Then as soon as we pop back over, another quick little support before lifting further up. And I just kind of work through structures the same exact way. And now we move to this area and we see that it kind of came down, bounced, came down, bounced before falling through. So I'm going to put a line here too and see same thing. We ran up, came here, bounced. We actually came up and bounced further down and barely closed over, but that close over, whenever you hear me say we need a close above or a close below, you see we closed over that resistance line and boom, we took off the next day. And then our next thing in the structure, we move up through here, and we have what happened was it opened here, the price went up, hit a resistance, and then bounced down, came way down, and then fought back up. Same thing on this day. The price opened here, took off to the top side, and then got fought all the way down past and then closed here. And then here, we opened down here and came up to this resistance. So we kind of have a lot of movement happening in this area. So now, when we're talking about DATs, look at, again, we got to close over this resistance line, right? So this is why people are talking about it, because we close over a resistance and it's ready to go again. So think of these as ceilings and floors. So right now, I mean, we can put our very top ceiling up here at all-time high, right? 1848. So this is your main ceiling. This is basically the top, your roof. Right now we have a 1, 2, 3, 4 level house, nice tall townhouse. And we just climbed into the attic. And now as soon as we are going to go and try to work and get through the roof, we're going to have some resistance here. So we're going to have to take an axe to it to break through the roof. But also we got into the attic and we have a floor below us. If we want to go down to the 3rd floor, we're going to have to take an axe to the floor and get down through there. So these are floors and ceilings. Think of it that way. This is my main style of trading, and why you'll hear me say things like a break above, a close above, or a close below. Now, these same ideas work on all time frames. What you need to think of is if you charted your things on a daily, your support and resistance on a daily, then these are stronger lines, but also tend to take longer to fill those areas, correct? So now, if we were to look at this on the 10-minute time frame and we were maybe thinking about scalping, you'll see that the lines still hold up as main areas, but let's see. So if I was trading this day, which is the 8th, we see that it made a high here. So I'll change the colors of this stuff as well. So it made a high here. And for intraday, let's just go blue. And then came down and made a low here at right there. So now we're trading in this range here, this tight range. Let's make it big so we can see, between 822 and 932. So when you hear me say that we need to break above, look what happens. This green candle came and closed above 932, and boom, basically ran right to 11 and further up. They work on smaller time frames. So when you're scalping, you need to start looking at support and resistance on the lower time frames. Ideally, the 15-minute might look better in this case. Looks a little bit cleaner, but that's a stronger close, right? You'll see that level alerts I've been using 10 minutes. For some reason, 10-minute closes have been giving you the lead edge of these moves. Thoughts on going to the 1, 2, 4 hour to find support and resistance between candles close and the wick? Yeah, I do that. I do that as a whole as well, especially on SPY, to find major support and resistance when we're scalping. As you can see, like on the 1 hour, even on DATs here, look at the 1 hour, how it kind of laid in these supports, these main supports. For DATs, it doesn't look like it played out too much. Ideally, my major support and resistance for everything, I like the 4 hour personally. It just so happens that's daily kind of worked out pretty nice with the 4 hour as well. But if we were to look at SPY's gonna be too messy. I probably haven't done much on Apple, and if I did, I can delete a bunch. But you can see some of my lines already here in the 4 hour for harder supports and resistances. So like where we are down here, like our next line is actually in between and be like there. So a lot of questions that I get are like based on wicks, right? Like, should you be at the top of the wick or the bottom of the wick? Well, really, it's all about touches for me. So this wick comes down, touches. This wick we pushed through, but we closed above. Wick pushed through, closed above, kind of bounced on, opened right on it, and closed above it. Came to, again, price came down, pushed up. So all these create touches, and that's how I choose whether I use the wick or the candle body. So finding in between the candle close and the wick, I guess, let's see what this looks like on the one. Not really, because, I mean, these are kind of fake out. I mean, you could then turn this into an extra support and resistance, I guess, for scalping. I see what you're saying, J-Hoss. As a whole, though, you're kind of, when you do that, you're kind of stacking like different time frames. So if you end up giving them the same colors or the same strength, then that's going to screw you up in your trades overall. Where I know like this is the 4 hour line. So if we dip alone, like I want to sell into the 4 hour line, it's stronger, right? Whereas like this 1 hour line here, look what it broke through it end of day today, right? Like you can see the 1 hour touch here. Let's just put it on to, so the 1 hour, just make it this purple line. You see how we have the support here on the 1 hour, and it broke through pretty easy, where we're probably going to see a pretty good bounce once we get into the 4 hour like it did here. 1, 2, took a third candle, a third 4-hour candle. So that took 12 hours, 3 hours to get through, right? Like a full 4-hour candle. Whereas you can get through these in 1 hour like one at a time. That makes sense. So that is a quick overview of support and resistance. Now let's go back to DATS and let's figure out how we could get price targets to the top side. So to find price targets, especially in all-time highs, we use a setup of fibs. There's two different fibs. There's one called Fibonacci extensions, which takes 3 points. It takes a low of a structure to a high of a structure to basically your next low, okay? And that will give you up targets above your all-time high. So 18.99, look at that, a nice round number. Then 22.22, 26.32. And this is all based off the Fibonacci theorem, where it's one of the most common mathematical equations in all of life. So shells, all types of geometric figures, they all come off of the Fibonacci sequence. And then, so that's how you can get for all-time highs on the extension. Now, the way we could use Fibonacci retracements for plays is, let's go over here and put the retracement tool. And when you're trying to get to the upside, it's always swing high to swing low. So you got to do it of structures. So you don't use this high because this is where we currently are. You have to go back in your structure and get your most recent high and then take your most recent low. And what this does is give you targets for pullbacks. And what these numbers tell you is 0 is basically your bottom. This is 23.6% of this total move from 1850 down to 736. And then 38.2% of it is 1162. 50% is 12.93, which if you do 1850, what's that? $11.20, $5.60, right? So $5.60, 96, 11, yep, 12.93, right there. 50% of the move. 61.8. And the way you use these are when you have a movement. Now, if we were to start flagging here, well, actually, I guess I actually did that wrong for this particular setup. So you would use it in the current mode. Sorry. So your most recent high, your most recent low. If you were to get a pullback down to the 61.8 here and flagging, basically creates a flag, 61.8 holds and starts lifting off the 61.8, then that is telling you that there's a 61.8% chance that we're going to continue higher. That's one way to use them. They give you good support and resistance. If we drop this into a lower time frame, we might see it. Let's get these orange lines out just so they're not convoluting our stuff. So now we would have taken the swing high from back here, from here to low, and then let's see what it did with all the other movements. You see how it bounced right between the 61.8 and the 78.6, and then as soon as it got above the 78.6, boom, gone, right? You got a nice little flag here as well. And then you could even do this into the smaller time frame, right? So let's delete this one out and let's go swing high to swing low. And you can see that the price came up here, bounced right off the 61.8, started continuing higher. As soon as it crossed the 78.6 again, took off and got over the one that's really your takeoff point within that zone. But that's how you can use these. Now they work both ways, whereas let's go back to Apple and we're on the 1 hour again. Let's go. So now for the downside, we go swing low to swing high. So So what this is essentially going to tell you is if we get a bounce back up to the 78 and hold, or even the 61.8, that's your entry, and then ride it back down. As long as it stays below the 61.8, you're good to stay in the play. So it would look kind of like this. It's basically setting you up for your retracement and bounce plays. So if you see the price come up here, you buy at the end of that move for the anticipation of that, which is basically just charting out your flags for you and safety
Excuse me,
spots.
S. Dot. I think you
Yep.
have some people trying to get into the room.
Sorry.
All right, thank you.
Yep. Sorry, people hanging out in there. When I get into the chart and stuff, I don't always see people sitting in the waiting room.
Yeah, we got to get better security. That's our fault.
So basically what the Fibonacci's are doing are helping you find areas of retracement where you can actually get in and with some type of safety. Now, some people use these as, I did not want to do that. Can use them just as strictly support and resistance as well. So go to the daily when you want to use that and do the same exact thing. So we're in a downtrend here. So let's go from swing low to swing high again. And let's see where these retracements played out. So the first one, so really we can kind of reverse back through it. And let's go to this first structure where your swing low would have been down here. And then your swing high would have been up here. Look how this bounced if you would have taken that. So on this day is when you would have started charting out your retracements on the 21st, because the 20th, it gave you your low off your high. So you throw your retracements in here and look how the price came back and got right into that 61.8. And as soon as it bounced here on the 24th, you could have gone short again. You go there and play that out. So that gives you basically, even if you waited for this day to close, 145 down to 38. That gives you a $7 move in 1, 2, 3, 4, 5, 6 days. So basically, you could have taken 2 days out and played that out perfectly. Now we're still in the same structure, and say you sold some into the one, let it break through because it sold some here. Then you still have, basically, you could use the 78 as your stop loss or the one as your stop loss once it breaks through. So you sell all the way through and you sell into these lines using it as support and resistance. And you see how that happened, where you had a resistance at 61.8, came through, a support at 1. When it finally broke through, it didn't quite make it down to our next support, reversed back through, and then we still had our resistance at 78.68. So you can see how that kind of lays out. And we could easily go over here and do it here. So again, for the top side, swing high, swing low. Let's delete out the downside one just so we can see it clear. Price came up. As soon as it bounced off the high again and starts turning around, we get our idea. We can throw our fibs on. Now it gets into the middle of the 61.8 and 78.6. But look what happens. It creates this range in between those two fibs. Boom, support and resistance, support and resistance. And now you know you can either play a hold of the 78.6 and play it up to 1, or you wait for the 1 to break out and take it to the next one. And look, it doesn't get any clearer than that, right? Look, it comes right into the next resistance, gives you a second day, can't get through, falls through, and boom, right where we started before. And that's how I use retracements the most, especially on stuff that I don't know as well. CEI. Another one, right? So as we hit this all-time high here, we would have gone swing high. I want to get below. I hate the magnet sometimes messes me up. So this is how you would do it and realize that it's not like you're not going to enter. As soon as it hits that high and comes through and breaks through the 61.8, you're not entering. You want to see it bounce somewhere. Now it bounces in between the 23 and finally gets up. I mean, that actually looks a little bear flaggish there. So we could do it to the downside now, which we'll do in a second. So this, if you were looking for like a retracement and a pop, it broke all your rules. At the very least, anything below 50%, the 50% line, you don't play for the continuation. Ideally, you want it to stay above the 61.8. Now let's do it to the downside and see how that played out. So swing low to swing high to the downside. Look at that perfect tap of the 61.8 and then continuation back down to the downside. Weird how that works. Any questions on that? I know Fibonacci's are kind of weird, but they do tend to work. It just, if you know how to do them, and I make a joke about it all the time. How Huey and I started our friendship is me critiquing his Fibonacci's because I thought he was doing it wrong, not knowing that he had been trading longer than I had. So
I got a question about the Fibonacci.
Go for it, Crypto.
Do you draw them from the top to the bottom or the bottom to the top?
It depends on the trend. So whichever way the trend's going, that's where you start. That's where your first click is. So this is now on a downtrend. We start at the bottom. Tell me when you can see it and ready to move forward. You there, Crypto? All right. So it's on a downtrend. We want to take our low point where we think it might have been reversing and take it back up to our most recent high point. Now, what were we just looking at? Apple was the perfect setup on a bunch of different things. Apple, vice versa. When it was on this uptrend here, and we were trying to figure out if it was just a pullback before going higher, you would go from the high down to the low. So whatever the trend is that you're trying to figure out if it's continuing to go higher or go lower, that's your first click. Uptrend, swing high to swing low. Downtrend, swing low to swing high. And again, you could do the swing low over here on this low to this high. Same thing, rinse and repeat. Swing high, swing low. Now again, for that retracement, for the extension, we can do the same thing where this is a 3-point. So this is to figure out your price targets to the upside, especially in all-time highs, where we don't know where the price might go. So for this one, when it pulled back here and started moving higher and got back into this all-time high that was here, and we want to see what our price targets to the top side are, we would do our first point from the bottom of the trend. Then we pick the high of a structure, and then we come back down to the low of the structure, which we'll stretch it out here just so we can see how it reacted through all that. Look at those extensions. So our high of the structure, boom, resistance, right at 51.51. Got through again, boom, 154.63. Look at that resistance. And even to the next one, up to 61.8, 57.74. This is why it's important to have these tools in your toolbox, because at this pullback here, you could have done this and had all your price targets, which I had for us when we had an inside day here. I had to do that for this and had all those price targets. Just things to add to it. Now you could do this for the downside too, and it would work just the same way. It would just be reversed just like the retracement. So you go from your high to a structure low here to a structure high. So here is your price target to the downside real fast for this next move. So it looks like we're going to get into 140, which we're already below that after hours, right? We fell through that 139, and I believe we're still below that 140. So then our next spot's 137. And we can kind of see where these are old numbers anyway, too, right? For support and resistance. Look back to the left here. That 137.18 was an all-time high break. Slowed down again when we got back over here on that redip. 134.95. Boom. Resistance right here. Resistance right here. Essentially. 132.71. Coach, this is just a fib extension. Sorry. 129.53. Boom. Look at the support, resistance. So all over again. It's just basically your regular support and resistance. That's why I don't necessarily use it for the downside, because we already have that stuff laid out. If I were to have done my support and resistance anyway, where would they have laid out? They would have laid out there. There. Let's see. There. So that one's more in the middle of a zone. But yeah. But still, that's why I don't necessarily use them for the downside, because we already have points where we know that we want to hit anyway. Any questions on that, guys? Again, I know this is a lot and some of it can be confusing. This is more to give you guys an overview. And if you have any questions, that you can hit me up in the chat, and I'm happy to go over this stuff. Again, all this stuff is more of an art than it is a science, which means you'll figure out little styles that work for you within all of this. And just because I have my style doesn't necessarily mean it's the right style for you. No questions? Bueller. All right. Well, do we have any other questions that we want to get into? Right now, to be honest, there's not a whole lot to be going over ticker-wise, in my personal opinion. What did ES?
I'm sorry. Someone is outside the door once again.
Oh, I just looked. I literally just looked.
Somebody just messaged me. Sorry.
Oh, Spider Boy.
Yeah. Thanks.
Yep. I've been trying to keep an eye on it.
Yeah, no more ins and outs. Stay in the room.
So I didn't look. What's ES doing? So ES kind of found the floor after close today, or right at close, really. And it's kind of ranging. I personally, we can go over a bunch of stuff. Yeah, I went over Pareto principle, STB. I recorded this so we can get it out to you. Essentially, it's called the 80-20 rule, where in economics and a lot of other things in the world, it's called the law of distribution, where 80% of your profits is coming from 20% of your clientele, or 80% of the property in Italy was owned by 20% of the population. We look at the United States wealth, 80% of the wealth is owned by 20% of the population, and so on and so forth. So we want to kind of establish that in our trading, right? The reason why we brought it up is because you brought up STB, like, why don't I just trade SPY all the time? Well, that's what you should be doing, because if 80% of your profits are coming from the 20% of the time that you trade SPY, and you're losing 80% of the other stuff on stuff that just isn't worth it, right? You're not winning. It's taking a lot of your time. So why wouldn't you focus on that 20% that's making you the most money? That's the short of it, but we will get the recording out to you too. Probably not till tomorrow. But again, back to looking at charts, we can look at stuff. We actually you guys had DATs probably on your list of things to check out, which we kind of went over. I know that on social media is just blowing up right now between Will Mead and Atlas Group. Here is your price targets to the upside. We could probably just for us to go through the steps again, let's do the extensions versus the retracement again. So swing low. I would probably use this line as our swing high anyway, and then come down here. So first stop 1630. I don't know. Did we get through there in after hours? What's that high? Close, 1618. And then 1876 next. which is going to be our all-time high. And then from there, it's moonshot. Anybody else have anything else that they want to look at? Go over. We can basically do whatever you guys want, education-wise or charts-wise. Anybody want to take over? You're more than welcome to happy to take over and go through. I'm happy if somebody wants to hop on and chart and me critique them to do that, whatever you guys want. I probably talked way more than we were expecting already tonight. SoFi. What do you see on SoFi STV? Just people talking about it all the time. I know T already has a play out for it for us, right? And what indicators do you want to know about, Coach? I don't know anything about the zero interest SDB. I am the worst for fundamentals. The investors think it'll go to 22. I mean, we're moving. So again, let's look at the daily. Daily. So just quick support and resistance. Again, we're looking at ceilings and floors. Ceilings and floors. And you can see SoFi closed above what I would consider a resistance, a quick resistance at least. So again, what we like to see are these closes above, and the daily close was strong, right over the support. I had already had a line there from back here, it looks like. 25 target, that probably fits pretty good. 25, yeah, I see it. It's super bullish. This was the main pivot we wanted to get over at $18. So now we are ready to roll. I definitely see a 21 right now from this 18 because we stay, yeah. Any close over, yeah, we close over 19, 21's in play for that. Price upgrade. Sorry, I'm catching up to the messages. See if Fab said any. No problem, STV. Sorry, I don't know about like the note stuff. Like I said, I'm the worst for fundamentals. I literally just play price action and charts. News, I don't keep up with news. I'm a bad trader in that aspect, but that's why I have Huey. Yeah, we'll make sure the news gets out, right? Any what do I think about any? I don't like that inside bar. That's a rangy inside bar. If you really, I don't even know why I have fibs on this. If you really want to play any, so the 716, it closed below, which we had as a resistance here, which probably could have gone a little higher. So definitely closed below. I'd almost be interested in seeing it tap this 660 again, or maybe a hair higher. Come down to 681. What did we actually close at? 7. So another 20 cents maybe, and hold the 681 and see if it lifts off that. It kind of has a frying pan bottom, which is bullish. It means it's caught its support moving up. But I mean, when it gets into these areas, your real safe play is either playing it on the bounce off the 680 or fully waiting until it gets over $8 again. And if it gets over $8, then you're automatically getting pushed into your first pivot here at like 835. So is your risk reward there? Probably not. So if you're not playing off a 680 hold and lift off to 835, then you need to wait till we're over 835 and letting it rip off that. BBIG is making a big comeback. I saw that today. But look at that big old flag. Trend flag. Breaking out, right? So ideally, you really want to see it stay over 6. But if it comes back and retests, so if it looks something like this, comes down, retests the trend and rips off, that is showing you a stronger move. Last one. Like that. That's showing you a stronger move because it retests the trend line, but this could easily stay over 6 and head in that 760 range. I mean, that's a $1.60 move on it. And then we saw if we can get over 760, that's where your strength is, because that was a nice, good support when we were coming down off those highs. And it was even a support back here before it revved up again. So really, if we can get above that 760 at this point, we can really get bullish. And then it looks like $7 is going to slow us down a little bit up to that 760. But I mean, it looks good. That breakout of the downtrend, right? And stay above 6. I think we get some movement. And since it's already on the main watch list, right? Everybody's going to already jump on as soon as they see it moving or hear that it's moving. So just a day like this alone will give you kind of peak interest. Then OCGN. Whoa, look at that gap up. I think T might have a play on this too. I mean, I like that gap up. It got and it closed above resistance, right? So we're into our next leg now. Let's throw the magnet back on for this stuff. Boom. Boom. So you see that it popped right in that resistance at 950. So if we get over 950, on to 11 we go. But that's bullish. We like that strong candle. And really probably the only sell-off was that SPY sell-off at the end of the day. Let's look at the 10-minute and see if that was all. Yep, look, that was all end of the day. That brought that back down off that. So it was literally with the chop of SPY was getting ready to break to the next thing. And then SPY decided to turn around on us, right? So let's see if we can keep the strength going and push through 950. And then you could take that to 1094. Pretty easy. All right. Anything else, anybody? I know Coach wants me to go back in the fib extensions. We can do that here, or I can just do it in the chat at some point. All right, so if nobody's going to speak up, I'll do the go through the fib extensions again. I'll go through it for you again, Coach. No problem. Don't mind. So let's just do Apple because I cleared all my drawings off Apple, so it's clean. So for the extensions and retracements, basically you have to know in what kind of area that you are. So if you are in all-time high areas like right here in mid-July, you don't have anything above. You have no clue where the price is going to go there. You want to use the Fibonacci extensions, which looks like this on TradingView, right there. And from there, you take a low point and you go to your high point. which you're going to do this once you're in, like once a close happens, or maybe you start a downtrend anyway. And then as it starts reversing, you take it to your low point. So basically what happens is the price runs up, right? Then they sell it off and it reverses and it starts heading back up. Well, you don't need to know about the all-time high points, right? Until it looks like you're going to break the all-time high anyway. So it would have been, so as you're approaching here, you don't really need to know anything until you're getting close and you're like, shit, I need to know my price targets to the upside so I can sell into strength, right? So that's where extensions come in. You tapped all-time high, you pulled back, and now you're looking to beat all-time high again. So you take it from the low of your previous structure up to that all-time high, and then back to your most recent reversal. And then I'm just stretching these out so we can see how it added up. So now you know once we break all-time high at 150, we know we got 151.75 to sell into, 154.82 to sell into. And again, look what happens as we got in those prices. It reversed, and those would have been perfect spots for you to sell into. Now for retracements, these are basically for price areas that you've already been in, and you kind of need price targets to the upside or downside as well. So I think our swing high, swing low worked out perfect for this one too. So what happened was we had this uptrend here, hit all-time highs, and now as soon as we hit this all-time high and we start opening lower, we want to see how far down are we going to retrace to before we head back up. So for an uptrend, you go swing high. Oh, wrong one. So retracement looks like this, just a bunch of lines. For uptrend, we go swing high, turn magnet off. I don't like the magnet for the Fibonacci's. Swing high to swing low. And what we're looking for is where is this going, where we hit all-time high, how far are we going to pull back and create a support and then head back up and then give us price targets to the upside as well. So long term, again, you'll hear like the golden line is the 61.8. Ideally, you want to see a nice pullback to the 61.8, hold, and then when it lifts up, you can be 61% confident that we're going to go test that 100% line again, which is the one line. Well, we never got down there, and we actually held the 78.6. So we can be 78.6% sure that we're going to test the one line, which we tested it within a week. Held it again, tested it within another week. Held it again, tested it again, pulled back, never quite got down there. So this is your classic dip and rip. And actually, look at this. 1, 2, 3. There's your fourth. Slight consolidation. Fifth. Triple tap. Rip to the top. Boom. Game time. JCat probably should have played that one for an easy $6 move in 1, 2, 3, 4, 5, a week and a half. And then same thing with Fibonacci to the bottom. We have a downtrend here. We go swing low to swing high though, because if we're in a downtrend, we start at the low spot. Same thing, retrace it at 68, almost in the middle here. Now we close back below it. We can be pretty certain we're going to hit the 1 again. Actually, we could probably bring it there because that's a decent support. So we actually almost have the 61.8 perfectly. Now we close between the 78.6, heading back to the 1, just like we have the 61.8% chance that we were going to tap it anyway. And then once we get below the 38.26, we look for the next leg down. And like I said, the downside for these, necessarily, they're easy for, they're not bad to use, especially on something that you don't trade a lot. But on Apple, most of you guys probably had a bunch of lines on it, and you could have told me all these downside targets anyway. Yes, coach, this is the daily. This works on all time frames, though. Let's look at this one on the, so it chopped, right? Well, maybe it didn't chop. Let's bring it in and see where a decent fib setup could be. Let's turn extension off, regular hours. Let's see what it looked like. So here, yeah, This will work. So fib extensions. So we're in a downtrend, right? We bounce off here for a reversal. So let's see where our perfect entry would have been today alone. Look at this. Perfect day trade, right? Started up here. Well, I guess yesterday. There's 2 days here. But it still plays out. So we started up here at 144. There's your high. Came down this morning at 1040, 1050. Bounced and started reversing, right? So in your daily, if you miss this whole leg down and you're still bearish, or you're still holding shares and you want to know where to add, or holding contracts and you want to know where to add, so you come through here, maybe you sold a bunch here into this area that's definitely showing reversal, right? Now, as it pulls back up throughout the day, at 12 o'clock, it taps into our 61.8, never closes above, so we're good. 12:10 taps into it again, never closes above. We stayed below. Now we can add or start our new position here and ride it down. Hopefully you guys can't see my thinkorswim, but I can tell you what that what's this? So if we would have waited and got in at 12:20, let's see what that 439 put would have done, or that 140 put, sorry, would have done from 12:20. Apple trade this week. Why do I have all 14 140 put from 12:20? First 12:20. So at 12:20 they were trading at 50 cents roughly, and they went to 90 cents. So just shy of 100%. You got 90%. You got 90% just by playing Fibonacci's, which tomorrow morning they're going to be even more, right? And that is how you use them intraday. They're for scalps, day trades, and you can work that across many different scalp day trades. Let's look at another one, Affirm, right? Everybody loves trading Affirm. Well, what has it done anything to make it easy to trade? Hell yeah, it has. Because look, this is just stair stepping, right? It's stair stepping up. So if you see stair steps, that's clearly decent fibs. So just look at here. Today at 9:50, it hit its low. And then it hit its high at 10:30. Well, if you wanted to see if you should be getting in or not, go swing high to swing low. Look at that. It stayed basically above the 78. So you could either wait for the break of the one, or as it comes down here and reaches VWAP and the 61.8, add here, ride it up. And you could even do that on each one of these little pullbacks. So again, swing high, swing low. This one crushed and got below the 50. So that one you're normally not staying going to be in, but as it approaches your 78, you can say, okay, I don't necessarily have to wait for the one because I can take advantage of this 139.50 to 140.17. Or as it gets above the 61.8 again, you can say, I'll take advantage of that 138 to 140. Why not? That's how you will use that. And this is actually another good spot to use extensions, right? So if you don't know how to do support and resistance, and you can become real familiar with these and get support and resistance laid out for you fairly fast. Look at that. Boom, 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 boom. Next one, 143 once you get above. It worked out fairly well, right? This isn't exact science, and we probably could have pulled this one down to here and might have made it look a teeny bit better. Not exact science, but it gives you the idea and areas where you might want to buy and sell into. These were all done on the 10-minute to show you intraday. I started on a daily. Oh, I already answered that. SPY. I mean, I can do SPY for you if you want, Coach, but my shit is so messy already, and I'm sorry, I am not deleting these lines. But we can do it real quick in the interim too. So let's do retracement again, right? because we're in a downtrend. Let's figure out our retracement. And we hit our high up here. We came up, hit our high, came down, bounced. So we want to know where this bounce is. Now for spot, oh, wrong way. Again, we're going downtrend. So swing high to swing low to swing high. Up here. Now for SPY, they tend to give you 50% retracements as your good spot to enter. This one actually hit the 38. But you can see how it pretty much played within those fibs for the most part. Again, as soon as you got below the 61, boom, it went. I know some people that only trade SPY with fibs. So basically they're doing this every day. If you want to do the extension down, you could have done it. Boom, boom, boom. Oh, hold on. Let me extend this one out just so we can see. Not too shabby, right? Giving you zones to sell into. I think a lot of people like these extensions for one, it literally colors it so you can see your zones to buy and sell into. Like that. Is that, did you want an idea of SPY, or did you just want to see how the fibs and stuff work on SPY, coach? And then Gavin, work having me do 100 things today. Sorry, I've been in and out. No problem, Gavin. We're just happy you're around me. Is GWH a pump and dump? Didn't see anything as of yet. GWH, is that somebody I wasn't super into the chat today, just coming off nights, but I did see DYT and JCat talking. I think even Huey. Nope, that wasn't GWH, was it? We were talking about the spa, X spa has the pump and dump look. GWH, I'm not sure, Gavin. I was on nights, so I was kind of out of the main feel of everything. Let's just look at it real fast. Looks kind of pump and dumpy. Recently IPO'd. One thing JCat did say about a recent IPO, those are hard to pump and dump though. Was there news behind this, Fab? Like I said, I was kind of out for today, but and I'm just trying to get you to help me. They just, yeah, not that you know. So then it feels pump and dumpy, right? That's a lot of volume. Hove is an extremely good morning and gap up momentum trader. So this stuff comes up on his scanners. So him mentioning it doesn't surprise me. And then DYT is always ear to the ground on news and stuff like that. So her being on top of these gap uppers too are no surprise. I don't know much about it, Gavin. I'm sorry I can't answer that question. But JCat would probably be better on answering whether it's pump dump. I mean, the chart from what I've seen looks pump and dumpy with it just fucking sitting in a 20-cent range all the time, and then all of a sudden gets a dip and rip. Looks kind of suspect, but anybody got anything else? We're at an hour now. I would love to go forever, but like I said, I'm just going off nights. I am ready to go to sleep, and I'll be in. Yeah, they're gonna have to add strikes based on that move alone, right? Because what do we go from? Quite literally $10 to almost did tap 30. It looks like 28.92 almost. Yeah, 28xx. Yeah, so they're probably definitely adding straights. I didn't GWH. I see them for the weeklies up to 17.5. So yeah, they're gonna have to add at this point. And I think the way that JCAT has broken it down, if they wait too long, that's when that gamma squeeze picks up, right? Because look, they had 14,448 contracts traded on those 17 and a halfs. So yeah, that's good. I mean, hopefully you can take profit in the morning if that's what you want to do. If there's no news behind it, I'd be worried about it, right? But like these kind of gap ups, no man's land, I mean, that's a huge candle even for the gap up, right? So it ended up gapping up 11 to 15. So gapped up $4 and then went another $13. Unreal, right? 100%. So these, you never want to be the person holding up here. Even if it flags out on you, right? Take your profit, get in on the flag out, kind of like, I guess Affirm kind of had like a similar like gap up and flag, right? Like that's like gapped up, what, 68 to 91, gapped up $30, flagged out on you. So even if it flags out, you want to kind of get in. Said, hold on. We will said, fuck that. We're not getting into these pump and dumps or Mamie stuff. That's funny. They really screw the people trying to play it, though. Anybody got anything else? Call it a night. I appreciate you guys more than you guys know. I should be in the hotline all day tomorrow and all day Thursday. So we can go over this stuff again. We can keep on driving this stuff home if you're in a hotline and we're just hanging out. Just literally say, hey, can we go over support and resistance? Can we go over the fibs? I have no problems just doing it over and over. And especially like the fibs, if we're day trading, be like, what do the fibs look like on that? To be honest, I sometimes forget to use them when I should be, especially on new stuff like Affirm. I should have been using. I don't have Affirm charted, but when we were trading it on Thursday and Friday, I should have thrown the fibs on there just so we had an idea, right? So yeah, thank you all so much. Appreciate all of you. Let me know if you guys need anything.